You know, whenever we talk about investing, our minds immediately jump to charts, numbers, and PE ratios. But what if I told you the single most important factor for success has nothing to do with any of that?
I mean, think about this for a second. It's a huge puzzle, right? The company is the same, the stock is the same, the price they bought it at is the same. So what's the one variable that leads to such wildly different outcomes? Well, it's the person, and that's what we're going to dig into.
And this gets us to what you could call the investor's paradox. The answer isn't about picking the perfect stock. It's never been about the stock. It's about the investor. It's about you.
So you see, the real action, the actual game where fortunes are made or lost, it's not happening out there on Wall Street. It's happening right between your ears. It's a psychological game, first and foremost.
So let's talk about this battle, your brain versus the market. Because, and this is kind of crazy, our basic human instincts, the very wiring that's kept us alive for millennia, actually makes us pretty terrible investors.
Just look at this mismatch. Our brains are hardwired for instant gratification. We want rewards, and we want them now. We see everyone else jumping on a hot tip, so we chase it. We see the market dip, and every alarm bell in our body screams, "Get out! Danger!" But successful long-term investing requires the exact opposite. It's a slow game that rewards patience and discipline, and most importantly, the ability to tune out all that noise.
And listen, this isn't just some philosophical idea. This fight inside your head has a real, tangible cost. We can actually put a price tag on what happens when you let panic take the wheel.
Okay, let's run a quick thought experiment. Imagine about 20 years ago, you took $10,000 and you put it into a simple, boring S&P 500 index fund. A really standard move.
Now, if you did the hardest thing imaginable, which is absolutely nothing, if you just let it sit there through all the crashes, the crises, the scary headlines, that 10 grand would have blossomed into over $60,000. That's the power of doing nothing. But here's the kicker. What if you got spooked? Let's say during a downturn you sold, just for a little bit. And in that time you accidentally missed the market's 10 best days. Just 10 days out of 20 years. How bad could that be?
The damage is, well, it's breathtaking. You lose half of your returns. Half. Your 60,000 plus is suddenly down around 30,000. That money wasn't lost because of a bad company. It was vaporized by one bad emotional decision.
And this is the absolute heart of the matter. The biggest risk in your portfolio isn't the economy. It's you. It's always been a human behavior problem.
Okay, so if the problem is psychology, then guess what? The solution has to be too. So let's flip this whole thing around and look at the mindset that actually wins the game.
The real test for any investor isn't about complex math or poring over spreadsheets. It's about these questions right here. Can you watch your portfolio drop by 20% and not hit the panic button? Can you hold firm when every single person is screaming that the sky is falling? Your answers to these questions will define your success.
It all leads to this simple but incredibly powerful idea. Success in investing doesn't belong to the person with the highest IQ. It belongs to the person with the most emotional control. The calmest person in the room wins.
And that's what being calm really means here. It's basically a superpower. It's the ability to delay gratification, to look at a scary headline or a market dip and see it for what it is, just short-term noise on a very, very long journey.
So as we start to wrap this up, the big idea is to shift your focus. Stop worrying so much about the stock market and start paying more attention to the market inside your own mind.
And that's really the final takeaway here. Next time you sit down to do your homework on a stock, take a little time to do some homework on yourself. Understand your own biases, your fears, your triggers. That's the most valuable research you'll ever do.
Because ultimately, it all comes down to a choice. Your behavior is going to be one of two things: your single greatest asset that builds your wealth, or your biggest liability that tears it down. The power to decide which one it will be, well, that's entirely in your hands.